All right, guys, in today's video, we're going to be talking about block trades, how sometimes they are initiative block trades that kind of start larger moves, and sometimes they are block trades that are mainly just looking to grab liquidity, and they actually show you reversals. Now, for block trades, basically what it is, it's just a large trade. Some people like to see maybe 100 contracts, maybe 500, maybe 1,000. It's really up to the trader to kind of determine how large of an order they want it to be. Typically with ES, anything above 100 is a standard block trade. And then for my chart here, I typically only have the indicator highlight anything over 300. If you guys are using Addis, you can use the indicator called Big Trades, and then just set that to whatever number you want the block trade to be. So for the first couple of block trades that came in today, we can see these circles here. The red circles are seller blocks. The green circles are bullish blocks. And for this one that came in around like 10 o'clock here on the high, this would be a block trade that I would consider an initiative block, a block that actually wants to go in that direction. So what you want to look for to kind of determine if that block wants to continue in that traded direction, so in this case it's a bearish block, so it doesn't want to continue bearishly, we want to look for that next couple of minutes, right? If you're using a 1 minute chart, you want to wait for that next couple of minutes and see, are they protecting that block trade? Is there a lot more bearish delta coming in on that next couple of minutes, or are they just immediately breaking that block trade? And for example, let's say right here, that block trade is trading around 6104 to 6109. If we're trading at like 6110, 6112 in that next couple of minutes, then most likely they are not protecting that block trade. But in this instance, they were trading at 97, 96, and so on and so forth. So they were obviously protecting that block trade. They were not allowing price to trade against that block trade. So we could see that as an initiative block. They are protecting it in the direction that it came in. Now, another example would be like this little bearish block down here. We had a little bearish block on the low of that move. So one thing to watch out for when you have these like impulse down, and then you have these bearish blocks come in after that impulse down, you got to think to yourself, that move has kind of already happened. So most likely that block trade coming in is probably grabbing liquidity because that big move has already happened. But still, you want to wait for a couple of minutes, kind of see where that price action is coming in. And right here, we can see that there was basically no price action below that block trade. So that block trade came in pretty much on the lowest point of that candle, and then you were trading above it. So in that case, we would say that that block trade was just grabbing liquidity, and it's most likely going to go against that order, right? So don't always think because it's a bearish block, because it's coming in red, that it's always going to go down. Or if it's coming in green, it's always going to go up. You need to wait for another couple minutes to kind of see where that confirmation is coming in, see who's protecting that block trade.